Therefore, using section 14 of the Partnership Act, if I were to convert my asset into the firm's asset, by only throwing it into the firm's asset, by expressing an intention to say it shall henceforth be firm's asset, that itself is sufficient enough to make it a partnership asset. I may thereafter say, for the purpose of posterity, I am going to record what I did orally. I may for the purpose of posterity record all of that, and therefore execute that in terms of an instrument concerned. But the very act of contributing, you could very eminently argue to say that it's not leading to a document being involved. No document is involved, no stamp duty should be there. That's where to be the position. We are able to transfer the properties into the respective firms concerned, depending on the convenience of the partners concerned, and therefore this LLP will have only share capital or share interest in firm A, interest in firm B, dilute that over a period of time by withdrawing the capital concerned, reducing the interest concerned, some point of time therefore liquidate this property in favor of somebody else, and then say these two parties or these two brothers will now respectively own the properties concerned in the hands of through these two firms concerned. And if you are able to therefore bypass the aspect of saying that the LLP conversion is not a transfer and the contribution of the LLP into the partnership firm is a transaction not liable for stamp duty, you can take advantage of 45(3) convenience to say that this shall be the stamp duty valuation, this shall be the amount credited in the books of accounts, that shall be the point, or that shall be the maximum consideration on which I am liable to pay capital gains tax. Therefore, the last topic I will deal with now would be the aspect of this contribution that is happening into a partnership firm. Briefly I'll deal with. Am I now going to be saddled with a 45(3) liability or a 50(c) liability? The paper has discussed all of these concepts, 50(c) being the fulcrum, 45(3) read with 50(c), 45(4) read with 50(c), 50(b) read with 50(c, and you also have the aspect of 50 independently of 50(c). Therefore, 50(c) is the main point for consideration as to what will happen. Can I therefore now say that in relation to 50(c) also, I will be able to say 50(c) shall and should yield to 45(3). Supreme Court had said in Karthikeya Sarabhai's case that the aspect of consideration is missing when a person contributes his property into a firm. His exclusive interest becomes a shared interest. To that extent, there is a transfer. Supreme Court said we have to work on that. An exclusive property becoming a shared interest, there is a transfer to the extent of dilution there. What is the consideration? Supreme Court said there is no consideration because the amount that has been given as a credit to the partner's capital account is not a consideration for transfer. It's only an amount to be reckoned, to be considered tomorrow when an ultimate division is going to happen between the partners concerned. So this amount of credit to the partner's capital account does not denote consideration. It's an agreement between the partners concerned that this shall be a relevant figure when ultimately when we have to dissolve the firm concerned, Garner versus Moore rule will to apply. I will therefore look into the amount standing to your credit for the purpose of interest rate, divide the interest or the amount available with the partnership firm. Therefore, they said 45(3) has the aspect of consideration lacking. They filled in that consideration by saying, hey, I am going to say that the amount that you are crediting to the partner's capital account shall itself be the full value of consideration. Very specific to that particular issue concerned. We have an omnibus 50(c) now to say that no, the fair market value of the building as per the stamp duty regulation shall be the full value of consideration. Obviously, therefore, there is a clash between 45(3) and 50(c). Look into historical aspect, look into the accounting aspect, look into the terminology. You can therefore have a battle. But the most important point for us to look at are certain aspects. 45(3) is sacrosanct. 50(c) is rebuttable. 50(c) is rebuttable. That's not sacrosanct. I can demonstrate. I can say 50(c) subsection 2. I can go to the valuation officer. I can demonstrate. I can challenge the matter in the stamp duty application itself and valuation report there, litigation. So 50(c) is a rebuttable presumption. 45(3) is all pervasive. 1. 2. When I transfer a capital asset into a partnership firm, it need not always be an immovable property. I could transfer plant, machinery, building, land. I could transfer all of these things concerned. Now you can't say that I will for the purpose of plant and machinery go to 45(3). I will for the purpose of land and building go to 50(c). No. You You can't have this inconsistency in terms of treatment. When you're looking at 45.3 to say this shall be the consideration for certain assets other than land and building, logically therefore you should extend that philosophy to other assets also, whether they are immovable properties or not. Now, you can't also depend upon a state level vagaries for a central level legislation. Stamp duty may be payable, some cases stamp duty may not be payable for the act of introduction. I made a statement that the state of Karnataka, for example, you may make a statement that stamp duty is not available or not applicable when the property is converted into a firm's asset. No stamp duty is payable. Therefore, you can't say now stamp duty is not payable, 45.3 also is not attractive. You're therefore trying to have a vagaries of state legislation impacting a central legislation where there has to be some sort of a consistency in terms of what 45.3 should hold the field vis-a-vis some sort of inconsistency, some sort of gaping holes available when you're trying to apply section 50C. And more importantly, 50C is a situation where you're dealing with an outsider world, transferee being outsider. In a partnership firm, the group of partners themselves are the same owners concerned. It's a transaction dealing with ourselves. Therefore, firm is not a legal entity per se. Not a legal entity. And dealing with ourselves. When I'm dealing with ourselves, don't have an allegation to concern that there is some sort of a underhand dealing, there is some sort of a suppression of consideration concern. It doesn't happen in partnership firms. Only when I'm dealing with a third party concern, rank outside of that, possible I have some other considerations involved. Therefore, when a person is dealing with himself or through a group of persons who are now compendiously known as partners, you can't therefore say, in the absence of an outsider involved, that there is some sort of a allegation of understatement of consideration. That should not happen. Therefore, for this reason also, you can make a statement that 45.3 should prevail over 50C, apart from the reasons that have been given in the background paper. There have been a number of other cases also we need to have discussed. 56 we need to have discussed. We need to also discuss forfeiture of land. There are some questions asked. There are also some questions asked in relation to tedious provisions. There are so many other provisions in relation to 80 IBS and questions were asked. Whether there is a proportionate completion, there is also a proportionate exemption being available. What happens in certain units of the property, we have more than the specified dimensions, what will happen. There are changes happening to 80 IPA in terms of the commercial area. We have the RERA Act coming into the picture. We have Amendment 23 deals about how to have the annual value of a property. There are a number of transactions, number of issues as far as real estate is concerned. The thrust of the budget was to give a focus to real estate. Therefore, one does find a number of provisions dealing with real estate. But I think with the time available, it's granted to me, I've gone beyond the time allotted to me also. That's the best I could have done. Thank you all for the very patient.